Welcome, ladies and gentlemen. Today it will be some special analysis on Bitcoin because we will look at the global picture. A lot of people still think that the current correction is not exactly the correction, but maybe the beginning of the bear market, and the whole rise which we had before is not the real one, and we will have like the continuation of the drop to lower low than even $3,000 that we had in December 2018. Now I will show you some signs, some confirmations for the fact that it's actually more likely, not 100% of course, but it's more likely to be just a correction, and it's almost impossible statistically to see some extreme blood coming after the exit of this triangle, and instead of that, all the odds that we'll see the continuation of the growth as a major trend over here. All right. So we'll look at the few things. First of all, just at the price action. You know, as we mentioned before, there is a previous high at the rise which we had from $3,000, $4,000, and the previous high was something like $9,100, and we had the drop to the same level. So previous resistance became support. This is the ideal, the classical situation for the correction, which would actually end at this point. And in fact, even though we are continuing going sideways, in principle, this is the same, pretty much the same situation. Even if we'll touch this $9,100 again, it still will be technically just a simple correction. Moreover, as you can see here on my chart, it is Bitfinex, I had some logarithmic scale lines here from the lows and the highs of previous bull cycle in 16th, 17th years, and those lines served as support and resistance pretty nicely during this bull market even. So you see here it was a nice support, and moreover there was a point of the reversal from the bear to bull period. Then here it was support, here it was the resistance. So technically, in fact, we have this one of those lines over here, and we may go lower to test it as a support once again, and it may be very close to $9,100, maybe even have a wick below that. So this is kind of a confluence with the support resistance flip which we just discussed, and you see how those pieces of the puzzle fit each other pretty nicely, right? So in fact, looking at this correction, I would like to address to DMI indicator. If you didn't know what is that, just go to the technical analysis playlist on my channel so you can find the details about DMI. The idea here is that we have the positive DI and negative DI lines which are showing the direction of the price action. So if the positive is higher, then it is bullish, and the other way around it is bearish. So now we are still in the bullish zone. And moreover, the black line, which is ADX, is showing the strength of the trend, and now it is rather high. So that's why, while people are comparing this triangle with this triangle which we had in the end of 2018, saying that, oh, it will go down, it is a descending triangle, yada yada yada, just look at how DMI indicator performed during this triangle. It was pretty much flat, and the strength of the trend was very, very low. The ADX was below 20. Here it was like 11. It's almost zero energy, I would say. Here it is absolutely different. In fact, this area is very similar to what we had previously during the bull cycle in 2016-17. You see, very, very similar. ADX is very high, starting to go down, but then it will return back again. The positive DI is going lower and negative DI is going higher, but then at some point this curves start to go up again, and this is starting to go down. So technically we see very much similar thing right now here. The positive DI started to find some stagnation, some fixed level from which it may actually return going up, and the negative DI most likely already found the top over here, and the only way is going to go down. So technically the same you can find for any other correction period in 2016-17. Here the same, here it is the same, here it is the same, and so on and so forth. So from the general perspective, this period in the price is almost identical. It's pretty much the same as we had so far in 16th, 17th. Is it 100% proof or identification? No, of course not. It's just the great match in terms of statistics. It means that it is more likely, the probability of that to happen, that to be correct, is very high. Of course, every time when we see such drop, we say that, okay, the market is ended, bull market is over, we're going to the new low, the bear market is about to come, and so on and so forth. The same here. We had such a huge rally, we were scared after the bear market before, and now every time when we have a kind of a hint that this will happen, then we got scared, then we expect that everything is over, we're going lower, new bear market, etc. It's very understandable. But again, just look at the other confirmation. If you remember, we were looking at the RSI. RSI lows on the weekly time frame, which is the most important in the longer trend perspective. Weekly RSI is going down in terms of the lows. The price lows are going up. The same, and this is actually a hidden bullish divergence, the same is happening with the stochastic oscillator. You see this low here and this low here, they are going down. Those two lows are going up. This is another confirmation. This is a hidden bullish divergence, even for the second indicator here. But that's not the main thing which I was going to show you. There is another interesting point about RSI and stochastic RSI. So of course, stochastic RSI is stochastic oscillator of RSI. So RSI is a kind of a fair price, if you will. So it may be a bit of a stretch, but just look at the coincidences here. So starting from pretty much bull period, let's say this is accumulation, this is the bull market started. Here, this is the lowest point of the correction, maybe the first big correction which we had, and moreover, you see the lows in the price are going up, lows in RSI are going down, pretty much the same as we have right now. And what happened after that? We see the new rise in price. Alright, anyway, this is the lowest point on RSI, this is the lowest point on stochastic oscillator, well, stochastic RSI. And here we have a bullish cross on stochastic oscillator in the zone below 20. After that, we see the continuation of the growth. Next one, here is the lowest in the point on the price, here is the lowest point on RSI, here is the bullish crossover on the oversold zone on stochastic RSI. Second coincidence, another point, even here, this is the lowest point price, RSI low, bullish crossover, low in the price, low on the RSI, bullish crossover, low, low, bullish crossover. Even bear market here, low, low, bullish crossover, low, low, bullish crossover. Here, the same. Even at the lowest point in the reversal, the lowest in the price, low RSI, bullish crossover. Every time, how many coincidences we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 points every time. Just every single freaking time when stochastic RSI had this bullish crossover, we had either the pullback from the drop which we had on bear market, or we had a continuation of the trend, the bullish trend which we had on the bull market. The same thing, exactly the same thing is happening right now. You see, we have very low RSI. Of course, it is not that low as we had before, so some people may say that we need to go lower, and in fact it's true. I say that it's just statistically unlikely to happen. So right now, low on RSI, low on price, bullish, hidden bullish divergence, so this point is on RSI is actually higher than the lowest point in the price chart. So, and the lowest point on RSI, we have a confluence with that. Looking at stochastic RSI, we have the bullish crossover here, pretty much the same as we had many times before. So of course, I don't want to sound like a perma bull, which I may be to some extent, but it's just the signs, the indication in the charts with indicators which are screaming. We found so many confirmations before. I covered like tons of them, showing that we are just in a simple correction. We will continue the growth, and everything which we see right now is just an attempt of the market to scare us off. But the most likely scenario of the further price action is the growth. Of course, guys, not a financial advice. I'm not a financial advisor, it's just my personal opinion. Just look at the arguments and make your own decision. This is what I would like to take as my approach, and it is not necessarily to be correct. So please make your own due diligence and make your own decisions based on your own analysis. Alright, tomorrow it will be a new video, and for today that is it. I hope that it was useful. Thank you for watching.